I know they did surgery on your hand. Did they also do a surgery on your head?
So, are we still down from last week with the trade? Or we made any progress in the account?
Last week we were down 0.5%. This week we're up 106%. Buddy boy.
Sorry. 106%. How did you do that?
So we bought Boeing call options, and we wrote that to our price target.
Options. What are options?
Option gives you the right, but not obligated, to buy or sell at a specific price.
So there's no obligation.
Correct.
So how do we trade options?
We trade options by buying calls and puts. So for instance, if Tesla is trading at 500, we buy one contract. Now one contract is 100 shares. You can buy the contract at 500 strike price, and now Tesla goes to 550. Now you're $50 in the money. To keep things simple, all we're doing is buying at the money. Because Tesla is trading at 500, once the price goes up, we are now in the money. And that's what we're doing. Now, on the contrary, if Tesla is trading at 500 and now goes down to 450, we can buy put. Now we would buy a $500 put at the money. Once the stock price drops, we would be in the money.
So why should I trade options over stocks?
Few reasons: leverage, the cost, risk. Now, let's take a look at the first one. One contract is equivalent to 100 shares. Now, 100 shares of Tesla stock would be $50,000, whereas one contract would be maybe $500. Now, the risk between buying the stock and holding an option, the stock might drop down $100 and you would lose $10,000 because you bought at $500, 100 shares, $50,000. The option, on the other hand, the most you can lose is whatever you put in. So in our case, if it's $500, the most we will lose is maybe $300. On the worst case scenario, we will lose the entire 500. Now, the most important thing is the rate of return. With options, you would get a higher rate of return on your investment.
So you mentioned call and put.
Yes.
Can you explain the difference between the two?
Call is the right to buy. Again, you're not obligated to buy it. Put, on the other hand, is the opposite, the right to sell, but not obligated to sell. Example, you can buy a Tesla call, $500 call, and now Tesla stock drops to 450. You are not required to buy the stock at 500. You have the option, but you're not obligated to buy the stock at 500. Put, on the contrary, you can have the stock trading at 500, now it goes to 600. Now it's selling. Put is nothing but selling. You are not required to sell the stock at 600.
I think you should stay put with that account. No, you should monitor it.
Look, I gotta go.
But I have some questions. I have more questions.
Yeah, if you like what you see, there's a link below. Subscribe to the YouTube channel. And if you like what you see, be sure you put a like. And we'll go further.
You have a YouTube channel now?
Yeah. All right.
Seems like everyone has a YouTube channel these days.